Hey there, fellow Americans. If you've been anxiously waiting for some good news about stimulus payments, you're in for a treat today. The IRS has just dropped a bombshell announcement that's going to make a huge difference for millions of seniors across the country. Before we dive deep into these life-changing details, make sure to hit that subscribe button and ring the notification bell to stay updated with the latest financial news that could put more money in your pocket. In a groundbreaking development that's sending waves through the financial community, the Internal Revenue Service has officially confirmed 3 separate direct stimulus payments specifically targeted at senior citizens, scheduled for release on January 24. These payments, amounting to $749, $969, and $1,359, represent one of the most significant financial aid packages for seniors in recent years. But who exactly qualifies for these payments, and how can you ensure you'll receive what you're entitled to? Let's break this down and answer all your burning questions. First, let's address the elephant in the room: why are seniors specifically being targeted for these stimulus payments? The answer lies in the devastating impact of inflation on fixed-income retirees. The federal government has recognized that seniors, many of whom rely solely on Social Security benefits, have been disproportionately affected by the rising costs of essential goods and services. These stimulus payments are designed to provide crucial financial relief and help maintain the standard of living for our elderly population. The $749 payment, the first tier of this stimulus package, is primarily aimed at seniors with an annual income below $30,000. This includes individuals who rely solely on Social Security benefits and have minimal additional income sources. The IRS has emphasized that this payment will be automatically deposited into the same accounts where recipients receive their regular Social Security payments. But what if you haven't filed taxes recently? Don't worry, the IRS will use the information from your Social Security Administration records to process these payments. Moving on to the $969 payment, this middle-tier stimulus is targeted at seniors with annual incomes between $30,000 and $50,000. This bracket includes many retired couples who depend on combined Social Security benefits and modest pension payments. The interesting aspect of this particular payment is that it comes with additional provisions for those with qualifying medical expenses. If you've had significant out-of-pocket medical costs in the past year, you might be eligible for supplemental assistance on top of the base payment. The most substantial payment of $1,359 is reserved for seniors facing exceptional financial hardships or those with specific qualifying conditions. This includes individuals who have experienced significant medical emergencies, those who provide care for dependent family members, or those who have faced unusual financial burdens due to natural disasters or other unforeseen circumstances. But how do you prove these qualifying conditions? The IRS has established a straightforward verification process that we'll explore in detail. One of the most common questions we're receiving is about the timing of these payments. While January 24 is the official release date, the actual deposit time may vary depending on your banking institution. Some recipients might see the funds as early as January 22, while others might need to wait until January 26 for the payment to clear. If you're wondering about the status of your payment, the IRS has set up a dedicated portal where you can track your stimulus payment in real time. But what steps should you take to ensure you don't miss out on these payments? While the IRS has assured that most eligible seniors will receive their payments automatically, there are some important actions you should consider. First, make sure your address and banking information are up to date with both the Social Security Administration and the IRS. If you've moved or changed banks recently, updating this information should be your top priority. The eligibility requirements for these payments extend beyond just age and income levels. The IRS has outlined specific criteria that could affect your payment amount or eligibility. For instance, seniors who are still working part-time might see adjustments to their stimulus amounts based on their earned income. Similarly, those who support dependent family members might qualify for additional benefits. It's crucial to understand these nuances to maximize your potential benefits. Let's talk about the verification process. The IRS has implemented a new system to prevent fraud while ensuring eligible seniors receive their payments promptly. This includes cross-referencing Social Security records with tax returns and checking for any discrepancies that might affect eligibility. If any issues arise during this process, the IRS will contact affected individuals directly. However, be warned about potential scams. The IRS will never call, email, or text you asking for personal information related to these stimulus payments. For seniors who haven't filed taxes in recent years, there's an important consideration. While you don't necessarily need to file taxes to receive these payments, doing so might qualify you for additional benefits. The IRS is encouraging eligible seniors to file returns, even if they're not required to, as this could unlock access to other tax credits and benefits beyond these stimulus payments. The impact of these stimulus payments extends beyond individual recipients. Economic experts predict that this injection of funds into the senior community will have a positive ripple effect throughout local economies. When seniors have more disposable income, they tend to spend it on essential services and goods, supporting local businesses and contributing to community economic growth. One aspect that's particularly noteworthy is the tax implications of these payments. Like previous stimulus payments, these new disbursements will not be counted as taxable income. This means recipients won't need to worry about setting aside a portion for taxes or seeing their tax brackets affected. However, it's still recommended to keep records of these payments for your personal financial tracking. The timing of these payments coincides with several other federal benefit programs, raising questions about how they might interact. For example, seniors receiving Medicare benefits or Supplemental Security Income, SSI, won't see any reduction in those benefits due to these stimulus payments. In fact, some recipients might qualify for additional assistance through other programs once these payments are processed. There's also been considerable discussion about the possibility of future stimulus payments. While these January payments are confirmed, many are asking whether similar support will be available later in the year. The IRS and federal government are monitoring the economic situation closely, and there's potential for additional support if economic conditions warrant it. For seniors who share households with adult children or other family members, there are special considerations to keep in mind. The stimulus payments are based on individual eligibility, not household income, meaning multiple eligible seniors in the same household can each receive their respective payments. This is particularly important for multi-generational households, which have become increasingly common in recent years. The method of payment distribution has also been streamlined compared to previous stimulus programs. The vast majority of payments will be made through direct deposit, significantly reducing the wait time for recipients. However, for those who typically receive paper checks or EIP cards, the IRS will continue to accommodate these preferences, though the processing time may be slightly longer. An important aspect that shouldn't be overlooked is the appeals process. What if you believe you're eligible but don't receive a payment, or if you receive less than you think you should? The IRS has established a dedicated appeals process for such situations. While they expect the vast majority of payments to be processed correctly, having this safety net ensures that eligible seniors won't miss out due to administrative errors. The role of financial institutions in this process cannot be understated. Banks and credit unions are preparing for the influx of deposits and have been working closely with the IRS to ensure smooth processing. Many financial institutions are also offering special services to help senior customers track and manage these payments effectively. For seniors who use representative payees to manage their Social Security benefits, there are specific guidelines in place. These stimulus payments will be handled in the same manner as regular Social Security benefits, ensuring that established financial management arrangements continue to function as intended. The impact of these stimulus payments on senior housing communities and assisted living facilities has also been considered. These payments will not affect residents' eligibility or fee structures in most senior living arrangements, providing peace of mind for recipients in these situations. An interesting development is the creation of community support networks to help seniors navigate this process. Many local senior centers and community organizations are offering assistance with tracking payments, understanding eligibility, and addressing any concerns that arise. These grassroots efforts complement the official channels provided by the IRS and Social Security Administration. The technological aspects of these payments have been upgraded as well. The IRS has enhanced its online tools and mobile applications to make tracking and managing these payments easier for tech-savvy seniors or their family members who help manage their finances. These improvements include more user-friendly interfaces and better accessibility features. For seniors with outstanding debts or financial obligations, it's important to note that these stimulus payments are protected from most types of garnishment. This protection ensures that the funds will be available for essential needs as intended, rather than being diverted to settle old debts or obligations. The international aspect of these payments has also been addressed. American seniors living abroad will still receive their payments, though some additional verification steps may be required. The IRS has coordinated with international banking systems to ensure smooth processing for eligible recipients regardless of their location. Looking at the broader economic picture, these stimulus payments represent a significant investment in the well-being of America's senior population. The total package amounts to billions of dollars in direct aid, reflecting the government's commitment to supporting this vulnerable demographic during challenging economic times. Mental health professionals have noted that these payments can provide more than just financial relief. The security of knowing additional funds are coming can help reduce stress and anxiety among seniors who have been worried about making ends meet. This psychological benefit shouldn't be underestimated in its importance to overall well-being. For caregivers and family members who support seniors, these payments can provide some welcome relief from the financial pressures of providing care. The extra funds might allow for additional services or support that could make caregiving duties more manageable. The environmental impact has also been considered in the distribution plan. With the majority of payments being made electronically, there's a significant reduction in paper waste compared to previous stimulus programs. This aligns with broader government initiatives to reduce environmental impact while maintaining efficient service delivery. One of the more forward-thinking aspects of this program is its potential to serve as a model for future senior support initiatives. The lessons learned from implementing these payments could inform the development of more permanent solutions to address senior financial security. The role of advocacy groups in shaping these payments shouldn't be overlooked. Senior advocacy organizations have worked tirelessly to ensure that the needs of older Americans are considered in economic relief measures, and these payments reflect their successful efforts. As we approach the distribution date, it's crucial for seniors to stay informed about any updates or changes to the program. While the basic framework is set, there might be adjustments to implementation details as the date approaches. Staying connected with reliable news sources and official government channels is the best way to ensure you don't miss any important information. The legacy of these stimulus payments will likely extend beyond their immediate financial impact. They represent a significant acknowledgement of the economic challenges faced by seniors and could set precedents for how we address senior financial security in the future. Remember, if you need more information or have specific questions about your eligibility, the IRS website and helpline are your best resources. Don't rely on unofficial sources or social media for critical information about these payments. As we wrap up this comprehensive overview of the January 24 senior stimulus payments, it's clear that this program represents a significant step forward in supporting our senior population. Whether you're a potential recipient, a caregiver, or simply someone interested in understanding these developments, staying informed is crucial. Don't forget to like this video and subscribe to our channel for more updates on financial news and developments that could affect your wallet. Share this information with friends and family who might benefit from knowing about these payments, and leave your questions in the comments below. Together, we can ensure that every eligible senior receives the support they deserve.